Hey, good morning, everybody, and welcome to Phillip, Statler, and Morning Dave as we look at the economic things happening today. So, hey, hold on, Dave will be with us just momentarily. Hang tight. We'll talk to you soon.
Today, downtown Sebring, we head to the offices of Statler Financial Services, where Phillip Statler is standing by on a relatively slow news day, right, Phillip?
Yeah, it seems to be pretty slow today, Dave. I'm not sure. Like we said the other day, we are really kind of at the tail end of earnings season. So, not much going on that front. We did have some macro stuff come in, though. We had the unemployment first time claims come in, and then we had the import prices come in. So two things we did have on the macro front. And both of them are, I don't know, they're not earth shattering. The jobs report came in at 229,000, which was not too far off. I mean, they expected 229,000, so you can't really call that a big miss. I mean, that's that could be just a rounding error there, really.
It kind of gets to that point, and then they look at the other report that comes out at the same time, the layoff report, and layoffs from jobs are still at abnormally low numbers. So by and large, we're getting the same data that we've had, and is pretty definite trend. We can say the economy is functioning all right, might be slowing down, but we aren't developing a jobless problem or an inflation problem by all indications, right?
No, we're really not. So those are some good signs there. And then you look at the the import prices, which you and I are both talking about how we didn't think that was a bad deal. It was up 0.6% for February, given that we've got the tariffs going on and this other stuff. We didn't think that was too bad, but that's double what was expected. They only expected it to go up by 0.3. So, so there, again, is it a big miss? I don't. The futures don't seem to be telling us this is a big miss.
I was going to say it. It's one of those things where you kind of sit back and wonder what on God's green earth the analysts were thinking of in putting together a 0.3% projection, because every indication we've had is that we're charging everybody and their brother for shipping something into the country, and you kind of expected more. I was more verklempt at looking at the data from China. There was a big manufacturing report in China, and it was not what they wanted to see. I don't have the absolute number, but it sure tanked the Chinese markets big time, almost from the get-go last night.
Yeah, it really did, and I'm there with you, Dave. I'm not sure. It was a manufacturing number. I can't remember the exact number. I was actually reading it last night.
I just found it.
Okay.
The Chinese industrial sector grew by just 5.3% across January and February, and that's the weakest rate of growth in 17 years, which is more than enough to put Chinese markets into a tailspin.
Yeah, that was. I remember the high teens. I just couldn't remember what the high teens were for, but that's the worst they've had in like 17 years. So that's a big deal for them, because their economy, when it starts to slow down, it doesn't just affect the guys in China. It's going to start affecting Europe. It'll start affecting us. Again, we don't have a silo when it comes to economics. Our economics are world-based now. And so when one of these other countries has issues, hey, we're right there with them. Eventually, it's gonna come our way.
Yeah, whether we like it or not, it is a world economy. Witness what import-export prices do, what our balance of payments do, and all the rest. Try to buy a TV that's not manufactured overseas. It just doesn't happen. We're interdependent whether we like it or not, and that 5.3% growth might be dreamland for us, but we're talking about a country with 1 billion people in it, and they need considerably stronger growth just to absorb the increase on their side of the fence. And kind of like you and I have said, when the Chinese government says it was only 5.3%, you wonder what it really was, right?
Well, that's true, because you and I have talked about that before, how the Chinese government controls what comes out, and they don't always have the data to back some of that stuff up, and nobody else looks at it. It's closed, and so we don't always really trust the numbers that come out of there.
Absolutely. So when they admit it's bad news, you probably figure it in reality was even worse than that. And Chinese markets have kind of responded by sort of tanking overnight. far as companies on our side of the pond is concerned, I gather one of those things where there's one on every corner reported. Dollar General's out with some information, huh?
Yeah, they are. They came out and let me see if I can find the right button here. There we go. So they came out with not bad, but they missed by 4 cents. Revenue did beat estimates though, and their same store sales increased significantly better than expected. Their same store sales came in at 4%. They were expected to come in at 2.6%. So, I mean, that's a pretty good size beat. So they did miss on earnings per share. They did increase their dividend by 10% rather. And they added some money to their share buyback program to up to $1 billion. So that's a pretty big number for them to be buying back. But they missed on the EPS, and that's hurting them this morning. They're down, getting close to 7% this morning.
With dividend buyback programs and all the rest, you wonder what it would have been had they not instituted those along with the report, right?
Well, that's true. I mean, that's that share buyback's got to be helping to offset some of the other parts of it.
One would think. So we're looking at a relatively quiet business climate this morning as far as news on our side of the pond. Some not good news overseas prompted the Chinese markets themselves to really tank overnight. 45 minutes before we open this morning, probably the driver, I'm looking at my numbers here again, Boeing is going to drag the Dow down again after we grounded all the 737 Maxes, because I'm seeing at least a little bit of green, except on the Dow, that syndrome we were talking about earlier, right?
Well, yeah. So, but I think the deal is that we are seeing. Well, you're delayed a little bit too, and I'm not. So right now everything's green. It's perked back up just a little bit, not much, but a little bit. So the Dow's up $11. The S&P 500 is up $2. Nasdaq's up 10 3/4. So those first two indexes are up less than 0.1%. So, and then gold and silver are trading down significantly this morning. Gold's down over 0.8%, back down to under $1,300 to $1,298 an ounce. And then silver's down 1.2% to $15.27 an ounce. And then I got really bad news, Dave. Really bad news.
Yep. Black
Oil.
gold is starting to approach gold, right?
It is. We're up 0.6%. We are heading to $59 a barrel. We are at $58.59 a barrel. I noticed this morning coming in, gas was at $2.59 a gallon.
Like I say, my exit strategy is real simple. A car that gets 40 miles a gallon on the highway, Phillip.
There you go, man. That'll help.
That's called protecting a nest egg on the low budget side of the fence. Overseas markets, I mentioned that China kind of tanked. It was interesting. It hasn't bled over into the other Asian markets. The Nikkei's off by just a tinge. The Hong Kong market actually up at the close this morning. Europe generally trading up this morning. Must be some good news that we hadn't heard about on the Brexit negotiations. Phillip, somebody want to turn this information into a stable retirement for their family, how would I find you on the phone?
Dave, give us a call at 382-0037. Follow us on our webpage at statlerfinancial.com. And then join us by liking our Facebook page, Statler Financial Services. Hey, we repost a lot of videos there and some other information. So some good stuff there. We are on the radio, News Talk 730, noon on Saturdays, except for this Saturday because of the 12 hours of Sebring. And then Sunday morning at 10 a.m. And then always streaming on their website, which is great.
Which is newstalk730am.com. Use it and abuse it. We got a lot of capacity. Phillip, thank you so very much. I appreciate it. And we'll catch you tomorrow morning, all right?
All right, Dave. Thanks, man. I'll talk to you tomorrow. Hey, I want to thank you for joining us today. I hope you got a little bit of insight. Earnings season, like I said, is coming to an end, so not a lot of earnings stuff there. We still look at some of the big macro stuff. So, again, if I can help you in any way, please click the link above and schedule a phone conversation, or you can come in and visit with us. Either way, but it's time you get a second opinion on your current portfolio. We would love to sit down with you and see if we would be a good fit for you. Hey, have a great day. I hope you'll tune in again tomorrow.